So do we care about a shutdown? Do you care about a shutdown?
No, not really.
Why not?
Look, we look at the big forces, and the shutdown and tariffs come within the category of fiscal spending, as far as I'm concerned, right? What do we care about big picture at VanEck for the big trends? Fiscal policy, monetary policy, and technology. Those are the big outside forces we think that affect the markets. And, government shutdown is not going to affect fiscal spending that much. I mean, assuming it's only for a couple of weeks, right, which is probably what it is. If the Republicans were to capitulate and suddenly spend $100 billion more on healthcare, which I doubt they will, then I think the trend is actually the opposite way. I'm the more optimistic person on the budget deficit being between 5.5% and 4.5% this upcoming fiscal year.
What I want to talk about is you guys have a house of ETFs, right? A bunch of different options and for investors. Where's money flowing in? Where's money flowing out right now?
Money's flowing kind of into everything.
And is money flowing in?
I'll tell you, the most interesting thing to me is one of the best performers of the markets is gold. Gold bullion is up 46%. It's up again today.
Yep.
The shares, gold, GDX, our ETF, is up 123%. But investor interest in the U.S. is really quiet. We've actually had $4.7 billion out of GDX and GDXJ this year. So take a lens out. I think what happened there, that was in the first quarter, people were actually covering their shorts. So they've been short gold mining shares probably for a decade.
Right.
But the money's not really coming in yet. So that's very bullish to me. Overall. And it only started coming into bullion ETFs in the last month or so. So American investors, because of the S&P, they're spoiled, right? Gold, who needs gold, right? NVIDIA's up again today. That's basically their attitude.
Why is gold up so much when you've got a market that, certainly here in the United States continues to take out record after record? You look at Chinese stocks, man, they have taken off in a big way this year. What is the nervousness? Gold to me usually says, I need somewhere, a safe haven to park my stuff.
Gold is the second global currency. Right, so you have the dollar. Obviously, we know about its dominance as a reserve currency, but because of policy uncertainty, war in Europe, Ukraine, Russian reserves being seized after the Ukraine invasion, there's so many things happening. I think that people are nervous and they say, okay, what else can I buy? And they can buy gold. They're not going to buy the renminbi, the yen, the euro. So it's become. Big developed market countries sold it about a decade ago and further. They're like, who needs it? It's an ancient relic. It doesn't give me income. But now the developed market countries, their balance sheets are much better, right? China's, India, they're growing, their savings, and they want some gold. And they don't want to be overly reliant on the U.S. either, right? And Trump doesn't make anyone super comfortable on trade policy or anything else. So they're just steadily buying gold. And so I think this is a multi-year trend.
Other trends that you mentioned, fiscal policy, monetary policy, and technology. I want to focus on that third one and talk technology, the promise of AI. In your view, what is it? What does it do to productivity? And how do you trade it?
I mean, I think we've seen these Mag 7 stocks being 37% or so of the S&P, and I like to do a thought experiment. I think it could be 50%. These companies, like Microsoft, has actually been laying people off this year. The revenue's going up, their costs are going down. They're just profit engines. And again, the AI search engines are benefited by scale, right? The more searches they have, the smarter their engines are, the better answers they give on your healthcare diagnosis or the market prognosis.
We're all helping them, right?
We are. And it's just the same. It's like social media companies before or Google search before. They're winning again. But just that's it. There's scale advantages and their profits are going up like companies we've never seen in history.
So how do you...
It makes you uncomfortable, right?
Well,
but
it's interesting because I think, we've spent so much time talking today about the spend, certainly with AI. And I think, we're worried about this kind of, circular finance, in terms of... the NVIDIA, was it NVIDIA and OpenAI deal? And so
$100 billion last week.
That's a lot. It's over multiple years, right? But, the investment in OpenAI and OpenAI buys NVIDIA chips, it does make you kind of scratch your head and say, wait a minute. So what is the value creation here really? And, are we masking kind of the exuberance that we're seeing in this spend and build out? And maybe it's not... maybe it's not. I don't know.
I mean, the one is just the quantity of demand that NVIDIA has. And when Jensen Huang is talking about visibility to 2027,
right.
I don't even say 2026 anymore because he's already 2 years ahead. That's number one. Number two, he's sort of rebuilding his whole tech stack every year. So he's moving so quickly because he's using AI to redesign the whole hyperscaling compute system. And how can anyone catch up? So he has a competitive moat. He's got market leader, right? And so, and he's got unit demand. And the number of tokens being consumed is exponential. That's what I think people don't get. It's not like I'm buying one computer, then another computer. It's going up in a huge curve. So I'm not saying things aren't expensive. They are. But I'm saying we're in the middle of this kind of technology revolution that we haven't really seen before. And these big companies are really well positioned.
We got to ask some ETF questions because you're known as the guy who brought ETFs to VanEck. Carol and I were talking earlier, once known for mutual funds, now known for both mutual funds and ETFs. As Alex Semenova reminds us, there are more ETFs out there now than there are individual stocks. How do you differentiate yourself?
We try to be careful in the ETFs we launch. We don't do leverage, we don't do inverse, and we try to identify industries where we can give a pure play solution. So I'll give you an example. Earlier this year, we put together an ETF that invests in general partnerships of private credit and private equity funds. And you'd be like, how come that ETF didn't exist, right? Just buying Apollo, Ares, Blue Owl. It's because those companies weren't all public 10 years ago. And so we just waited until there were enough to assemble an ETF. And it's a pure play, and that's what we like to offer to the market.
How much further do you want that private market thing to go in terms of ETFs? Like, do you envision then the next step of actually being, it's not just buying the companies, but buying the deals or the portfolios?
Yeah, I mean, not in an ETF format, but definitely I look at the unicorns that are private companies, and there's 7 trillion of them or so. And I can see putting those into a fund that people want access to, the OpenAIs, the SpaceXs, Stripes. I think that financial engineering will happen.